Let's bring in King Lip. He is chief strategist at BakerAvenue Asset Management, and Apple is among his firm's top holding. Now, King, I have to say, if there's any concern about production levels and demand in China or anything around Apple, it certainly doesn't seem evident in the stock. We talked about the performance recently. I was just looking at, its relative valuation to the S&P 500 is pretty much at a high post 2010. It's 7.3% weighting now in the S&P 500. That's a record high. Seems like people are pretty comfortable owning it here. I mean, any reason you have to either think that a lot of the good news is priced in, or is there still, runway for the stock?
I think Apple has been one of those names that has been so resilient despite the macroeconomic uncertainties. I think a lot of people were sort of written off China, if you will, for the quarter, but they came in actually better than forecasted. I don't think we're quite out of the woods yet for Apple with regards to China. But the reality is that Apple is viewed, as you said earlier, as a premium product. So that's something that Chinese consumers, ascribe to. So we think it's a stock where you can play both defense and offense, which is reason why it's one of our top holdings at our firm.
Yeah, it absolutely seems like it has that status for a lot of investors. Just the stability of it, the buyback, and all the rest. I do wonder, though. I mean, we're a good ways, I guess, from the next model cycle. They seem to have smoothed out that whole kind of upgrade, cycle every couple of years. But is there anything that you'd be on alert for, King, that says that maybe it's going to have a hiccup soon?
Well, I think one thing we're looking at is, the wearables business wasn't particularly strong, in the recent quarter. The Mac business and the iPad business was also sort of below expectations. That's something that I think we'll continue to monitor. A lot of that was due to supply chain issues, which we think will start to get better, in the second half of the year. But we're still looking for a catalyst, especially for the services business, which honestly wasn't particularly great as well in terms of meeting forecasts. So those are the two main things that would sort of keep us up at night in terms of wanting to see more growth driven there.
Steve, as much as there is a little bit of a perhaps mixed signals about China demand, it seems in general, given all the difficulties so many companies have had with China supply chain stuff and the chip pipeline and everything else, that Apple to date seems to have sidestepped those again.
Yeah, they did it, Mike. That was something I asked Tim Cook about when they reported earnings a couple weeks ago, and I was like, how did you do this? And he really credited the team on the ground. Now, they really prioritized the iPhone production over other things. That's why the Mac was so weak. And in fact, they said on the call that they couldn't make enough Macs to even really test what the demand even is. So it's hurting the Mac business by prioritizing the more profitable iPhone a little bit. But that's what they need to do, especially we're, believe it or not, about 6 weeks out from a new iPhone.
That's amazing. Yeah. And well, I guess, the fact that they think that there's more Mac demand than they're serving is interesting, given the PCs are kind of in a hangover phase right now elsewhere. Elsewhere in tech, are there things that feel like they're less well recognized in terms of the virtues of them and better opportunities than a stock like Apple, which has outperformed so much right now?
Sure. I think, in terms of one of the high beta growth names that have really been hurt in the past year is a name like Zoom, which, definitely is not as high quality as Apple, but we do think the stock is starting to bottom out here. The company is profitable, has great profit margins. It's about $5.7 billion in cash with very little debt, $1.5 billion in free cash flow. So I think as the market, sort of solidifies and finds its footing, if you will, I think names like Zoom will start to get back some investor demand.
Yeah, that's interesting. It looks like a lot of those pandemic favorite stocks where you had the crash, and now it's slowly kind of rebuilding off that lower base. We'll see how it goes from here. King, great to talk to you. Thank you very much, and thanks, Steve.